Hello and welcome. This is Rupert Pontin, Head of Insight and Communications here at Brego. I'm back with a slightly delayed Brego Leisure Intel broadcast for May 2026, in which we're going to have a look at what happened in the UK leisure sectors during the course of the month, as well as a short summary of the political position and the UK economy, and to have a look at some of those things that drove retail consumer activity during May 2026. So, without delay, let's get ourselves underway. The economic update, first of all. So, the war with the US and Iran remains on a really unsteady ceasefire basis, and Donald Trump continues to claim an agreement is almost in place to end the war and reopen the Strait of Hormuz, freeing all those ships that have been there for months. The goal here, of course, is to get the oil moving as soon as possible and reduce the cost of fuel and energy and stabilize the world economy and stop the inflation that's beginning to damage many countries worldwide. Unfortunately, there's also further unrest elsewhere in the Middle East, and this has further exacerbated the economic crisis. But it does look like the end is in sight, which is good news. The UK economy remained under pressure, and Keir Starmer is looking increasingly like he's going to have to leave his position. The May economic KPIs show a conflicting view, and that is interesting given the world economy as it stands at the moment. Firstly, the inflation rate actually dropped to 2.8%, which came as a welcome surprise, to be honest. This was helped by lower costs for food and for non-alcoholic drinks, running at around 2.2%, which offset the fuel and energy rises, which are around 6.8% or so. In addition, the Bank of England Monetary Policy Committee left the base rate unchanged at 3.75%, and that's also great news. Now, these two things helped the Consumer Confidence Index, and instead of getting worse, which is what was expected, it actually improved by 2 points to minus 23. And as I said, that's against the expectations, but we'll have to see how that goes in the coming months. In addition, the latest business confidence figure, that is static, as we know, because that's a quarterly figure. It's still at minus 65, and that's the lowest it's been since Q2 of 2020, which of course was in the middle of the pandemic. Despite the continued stagnation in the property market, the mortgage rate has in fact edged down very slightly by 0.1%, and that's left it at 5.1% for a 2-year mortgage. But this is unlikely to give any boost to the housing market because they desperately need it, but it's just not going to get things moving. So the ongoing closure of the Strait of Hormuz saw the price of a barrel of oil rise to $110 at the beginning of the month, although it did drop to $92 by the end of May. But the cost of fuel at the pumps still rose from £1.57 a litre to £1.59. They were very quick to put the pricing up. They seem reluctant to put it down. I wonder why. Finally, the unemployment figure rose again, and that's up to 5%. And unfortunately, this is likely to continue to rise in the coming months as the economy really begins to feel the full effects of the war. Therefore, we've had another month of confusion and mixed messaging, which is unfortunate. We can only hope that Donald Trump is indeed close to an agreement and that we really can finish the war and that the UK government settles itself down after the last few weeks of speculation. Okay, so the UK used leisure market, and we're using insight from the Brego Whole Market data, okay? So we'll start with touring homes. So total adverts increased by 7.7% after a 5.7% increase last month, and that shows there's still a good supply of used stock coming to the market. Now, normally this would perhaps signify a slower sales rate, but that's not the case. Two-berth adverts increased by a moderate 6.3% after 12.5% in April, and that's broadly in line with the whole market figure. Now, four-berth adverts grew slightly higher at 8.4%, and that's a reflection of the activity in the new market in the last 6 weeks, or families coming into the market and buying more caravans. Part exchanges are therefore higher, and they're starting to hit the dealer pitches. In total, the number of four-berth adverts represented 57.2% of all adverts, and that's almost exactly the same as it was in April. Now, sales volumes, as I said, they're positive. They've increased by a moderate 2.8% after 11.7% increase in April. That's a little lower than expected, perhaps, but still welcome. And the market share split, when you look at sales volumes, was for two berths, it was 18.6% of all sales, and for four berths, 58.2%, and 5 and 6 berths, it was a 14.5% share of sales. So that clearly shows that the family buyer was out in force during May. Looking at days to sale, they dropped to 44.1, which is an improvement of 4.2 days. And that's good news. That's another step towards normality, given that last year in May, it was an average of 41.9 days to sale. So we're nearly getting to where we were last year. The average used touring home sale price, that dropped by 5.6% to $15,629. Now, for further context, the average two-berth price decreased by 4%, the four-berth decreased by 2.2%, and the 5 and 6 berth decreased by 4%. 24.4%. And that really reflects the fact that consumers are more cost conscious right now, and they're looking for newer versions but at a lower price point. So holiday homes, total adverts increased by a healthy 12%, and that was off the back of 26% in April. And that suggests that sales may be a little bit slow, but in this instance, as with touring homes, it's actually a reflection of more used stock hitting the marketplace. When we look at sales, and that's indicated by the number of adverts removed, we saw a solid increase of 13.2%, which is close to what would be expected for this time of year. And that could be due to the better weather and the consumer fear of holidaying abroad during a period of geopolitical instability. When you look at it by two-bedroom versions, volumes improved by 26%, and that, of course, is positive. And three-bed sales actually remained exactly the same month on month. Again, that's a good thing because we're not seeing a decline. From a days to sale perspective, they increased actually by 10.1 days to 50.8. And that has been as a direct result of the sales slowdown that we saw in April. And actually, it sits higher than it really should be for the time of year still. Average used holiday home sale price, that decreased and now sits at 23,829. But let's be clear, it decreased by just £71. I think that's 0.3%. So really minimal movement there. So perhaps you could say there's a little bit more strength in that vertical. Motorhomes and campers, total adverts increased by 6.9% during the month, and that kind of seems in line with market demand, although used stock levels are increasing a bit above average for some of the dealers out there, we understand. Sales during the month increased by a healthy 7%, and that's almost in complete alignment with advert volumes. And the split, for reference, was an increase of 10% when you're looking at motorhomes, and when you're looking at campers, it was a 14.9% increase. Trade adverts rose by 6.7% in line with total advert volumes, so that's a positive, and private adverts increased by 10.9%. Now, we have been through a period of 3 or 4 months now where we've seen significant month-on-month increase in the number of private adverts. Now, this is still above the normal levels, perhaps, and reflects the desire for more of the probably home-converted camper owners to move to more modern factory conversions. So I think that's what we're seeing as a result of the increase in private adverts. Now, days to sale were fairly similar to April, and there was only a 0.5-day increase to 76.4, which, to be honest, is a little high for the time of year, but apparently representative of the current market demand. So that's where it sits. Now, the average sale price of used motorhome and camper decreased again by 1.7% to £52,088. And that's highlighting again that trend towards cheaper units, and probably still reflective of the increase in cheaper models on sale from the private vendors. So to summarise the Brego Leisure Intel for May 2026, sales levels across all verticals have increased by between 2.8 and 13.2%. And that shows we're approaching the peak sales period and reinforcing the view that retail consumers are not scared to spend money for leisure pursuits despite the global economic woes. And that is a thing that happens in the UK. We are very, very strong in the leisure sector when times are bad. Stock levels have also continued to increase, and this is a potential worry, although it is probably a reflection of the higher part exchange volumes off the back of new sales success. The dealers tell us that there are new consumers entering leisure asset ownership across all verticals, and they're doing that because they'd rather invest the money in the UK where they feel safer than they do travelling abroad or setting themselves up for large costs on fuel surcharges. From a days to sale perspective, there's better news as the average all market verticals decreased, and that is expected given the leisure markets are heading towards the busiest time of year, so that's positive. Average sale prices have all decreased across all the verticals by between 0.3% and 5.6%, depending on the market vertical, further highlighting that consumer trend towards lower priced products and the desire to look for cost savings where the cost of living is rising so much here in the UK. Now, whilst May has been another pretty good month on the face of it, we do know that the war in the Middle East is going to impact both global and UK economies for quite a while, even if the USA and Iran find a resolution to their difficulties. Inflation is certainly set to increase further, which is a bit of a worry, and we'll just have to see how the government handles that. Although the forecast for the Bank of England base rate increases have now dissipated, so that is a positive. Now, I know you will have found this a valuable review of the UK leisure markets in May, and if you want or you need more detail, be sure to read the Brego Monthly Leisure Insight Report, which can be found on the LinkedIn page and also on our website. Alternatively, please feel free to reach out to me either by phone, email or LinkedIn. It's worth noting we're also now posting insight and updates on our YouTube channel, which is called Brego-Official. So feel free to look us up on there. In addition to which, for those that may be interested in a wider view of Brego data, we also now sponsor the Dealerway DealerPod weekly car podcast, and we have also teamed up with Motor Trade Radio as their trade values partner, giving a monthly summary of used car activity in the UK market. So finally, I just want to reiterate that if you want or you need to improve your market insight and understanding of today's nuances in the market and the UK leisure sector, then you really need to speak to the Brego team. Now, Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you to be able to understand the market better, and also how to set better, more relevant trading and pricing strategies. And ultimately, of course, increase profitability for your business, because that's what you need. Remember, they don't bite, they're here to help, and they're here to empower you. Thank you for watching, and I look forward to seeing you soon.